Hello, this is Julie Griggs. I'm a CPA and partner with Burgess & Company in Franklin, Virginia. In a joint venture with Franklin Southampton Economic Development and Burgess & Company, I'll be presenting a summary of the key aspects of the Small Business Administration's Paycheck Protection Program, also known as the SBA PPP loans. This presentation is based on our interpretation of information known to us as of April 2, 2020. Things are changing rapidly as the SBA and the IRS are rolling out the details of how their loans and tax provisions will work. So before making a final decision, be sure to check the SBA and/or IRS website for the latest information. The Paycheck Protection Program, or the PPP Loan, is a new SBA Section 7A program that's designed to help businesses keep their workers employed by providing financial support for payroll and certain other expenses through June 30, 2020. The CARES Act has authorized up to $349 billion in potentially forgivable loans to small businesses to help pay their employees. The loans are 100% SBA guaranteed. Due to the $349 billion funding cap, it's believed that the funding will run out, so we encourage all business owners to apply immediately for this loan. The deadline to apply for the PPP loan is June 30, 2020. Eligible businesses are any small businesses that were in operation as of February 15, 2020 and had fewer than 500 employees regardless of revenues. This would cover C Corps, S Corps, partnerships, and LLCs. It also includes sole proprietorships, independent contractors, and our self-employed individuals regardless of whether you had employees or not. In this category, it also includes nonprofit 501c3 entities with fewer than 500 employees. For small businesses who may have over 500 employees, we encourage you to check out the SBA website and search for SBA employee base size standards and see if your industry falls in one of their categories. If it does, you might also be eligible if you have over 500 employees. Included in this class is also provisions to cover veterans organizations under IRS 501c19 and tribal business entities. We caution you if you are an entity that has affiliations with parent companies, affiliates, and subsidiaries. There are additional rules related to these type of entities. The cover period begins February 15 and ends June 30 of 2020. The loan amount is the lesser of $10 million or 2.5 times your average monthly payroll cost. The loan amount is 250% or 2.5 times your average monthly payroll cost. If you are in business all of 2019, you would use your average monthly payroll cost for the 2019 tax year, excluding cost over $100,000 on an annualized basis for each employee. If you are a seasonal business, you can elect to use an average monthly payroll for the time period of February 15th to June 30th of 2019 if that gives you a higher monthly cost. If you were not in business a full year in 2019, then you would use your monthly payroll cost for January 2020 to February 29th of 2020 and average that by 2. If you took out an economic injury disaster loan, also known as the EIDL loans, between February 15th to June 30th of 2020, you can elect to refinance that loan into a PPP loan so that you have the potential for loan forgiveness. Eligible payroll costs are compensations consisting of salary, wages, commissions, cash tips, and equivalents. Basically, it's your gross payroll. There's a cap of $100,000 on an annualized basis for each employee and/or owner. So if anyone makes over $100,000, only the first $100,000 can be included in eligible payroll cost. Employee benefits paid by the employer for paid time off, dismissal or severance pay, and also the employer portion of group health care and the employer portion of retirement benefits can also be included in eligible payroll cost. Also, you can include the state and local tax assessed that is based on compensation. So for our area, that would be your VEC unemployment tax. What is not eligible is employee or owners who make compensation over $100,000. The amount over the $100,000 would not be an eligible payroll cost. Also, if you provide compensation to employees who do not live in the United States, their principal residence is outside of the U.S., then their payroll costs would not be eligible. Qualified sick and family leave for which a credit is allowed under the Section 701 and 703 of the Family First Coronavirus Response Act, which was the phase 2 of the stimulus plan, the credit, those wages that were used for that credit are not eligible payroll costs. Allowable uses of the loan funds are for payroll costs of the employees, the employer's share of health care benefits, and other costs such as mortgage interest, rent payments, utilities, and interest on other debt, as long as all of them were in place before February 15th. Loan terms are the same for everyone. Interest is a 1% fixed rate for the duration of the loan. Interest will accrue over the 6-month deferral period. Accrued interest can be considered under the forgivable loan provisions. No fees are to be paid by the borrower to the SBA, lender, or agent. Prepayments are allowed with no penalty. No payments of principal or interest in the first 6 months of the loan. Any portion of the loan not forgiven will be due in 2 years. There are no personal guarantees, no recourse to the shareholders, members, or partners, or business owners, except to the extent that the proceeds are used for a purpose not authorized under the program. The application process and requirements are changing daily as the SBA issues procedures for these loans. You must go to an authorized SBA lender to apply for the loan. That's normally your larger banks, but some of our smaller banks and credit unions are in the process now of trying to become SBA lenders. Participating lenders will be permitted to determine the borrower's eligibility under the PPP program. With a properly filled out loan application and all your supporting documents, these loans should go fairly quickly. Full funding of the loan should occur in days. So be sure to take your bank information with you because they want to do direct deposit of the loan proceeds. There should be no underwriting provisions to determine borrower's repayment ability or your credit worthiness, as these provisions have been waived by the SBA. So therefore, no credit report should have to be pulled. The underwriter only should have to verify that you are in business as of February 15th with one or more employee or outside sales force or independent contractor who you treated as an employee and who worked for you and you paid as a 1099 recipient. If you are in operations on February 15th and you are self-employed, you are also eligible for these programs. As a self-employed individual, you will have to provide a profit and loss statement or a Schedule C for 2019 as proof of your net income. All owners with 20% or more ownership interest will be required to be listed in the application and must each certify to the good faith of all the required certifications. When can you apply? Small businesses and sole proprietorships are supposed to be eligible to start applying on Friday, April 3rd. However, we have been told by the local banks that they don't have the information they need yet, so I have a feeling that this date will be moved forward to next week. Independent contractors and self-employed individuals can start applying on Friday, April 10th. The loans must be processed by your lender by June 30th, 2020. Because it's believed that the funding is going to run out, you are encouraged to apply as soon as possible. We don't want you to miss out on these loans, and so you need to get your name on your banker's list so that they will call you when they have a slot available. We all know that we're dealing with unusual times where we're trying to avoid face-to-face contact. So the lender might have you have some methods in place that they have you send the documents to them. We'll have to find out who your lender is and how their procedures are going to be. But we do highly recommend you go ahead right now and call your lender to get on their list or schedule an appointment. To apply for the Payroll Protection Program loans, you have to complete a Paycheck Protection Program loan application. It is our understanding that will be one more revision to this loan application. So if you've already started, you may have to do a new form. You will need to provide the lender proof that your business was in operations on February 15th. You will also need to provide them proof of payroll, if you have payroll, that documents your employees and their information that supports independent contractor payments. And you also will have to let them know the number of full-time equivalent employees you have. You will need to provide this information to support the loan amount calculation that you do, or if you rely on your lender to do that calculation for you, then they will need that documentation to do so. Also, for sole proprietors or single member LLCs, you'll need to provide not only payroll information if you have employees, but you also will have to provide Schedule C of your 2019 tax return if you were in business for a full year, or some sort of financial record, income statement that shows what your income and net profit was as of January 2020 to February 29th of 2020. The lender will coordinate with you what documentation that they will want to see, but it's probably going to be faster for you and more to your advantage if you are aware of what you need to provide before you do it, and you give all that documentation to them with the original application. The best part of the Paycheck Protection Program loans is the possibility for loan forgiveness. As an incentive to retain employees and rehire layoff employees, the CARES Act provides the PPP loan that has a provision that it may forgive the funds that you borrowed if you prove that after the 8-week period that you have spent the funds on the program allowed expenses that we talked about earlier, and that your employee full-time headcount or your full-time equivalents and their compensation have not decreased. To be eligible for loan forgiveness over the 8-week period, beginning on the funding date until the end of the 8-week period, the loan, you have to provide documentation to show how your loan funds were spent, the covered payroll costs, and other eligible costs such as mortgage interest, rents, and utilities. To get full forgiveness of the loan, the borrower's full-time equivalent employees and your compensation levels must be maintained. The best aspect of this loan is that any portion of the loan that is deemed forgivable is tax-free to the small business. That is a huge advantage. We look at this as a win-win for the business and the employee, because basically if you follow the program as outlined, you're being given the money from the SBA through the government to pay your employees and keep them employed. If you do not use the loan proceeds for your intended use, there will be a potential reduction in the amount of eligible for loan forgiveness. Your loan forgiveness will be reduced proportionately if you have a decrease in your full-time employee headcount. They also use the term full-time equivalent employees. We are making the assumption that these two terms are interchangeable. If an employee's compensation is reduced by more than 25% during the 8-week period, their payroll will not be allowed to be considered as part of the payroll cost that you're using to apply for forgiveness. If you've laid off employees, you can rehire after you receive your funding, and as long as you get your full-time employees headcount to be the same and your salary levels made up for the changes between February 15, 2020 to April 26, 2020, you will not be affected by the reduction in loan forgiveness. So you have time to rehire your employees and catch up your headcount and catch up the payroll so that all your total payroll costs can be considered for loan forgiveness. After the 8-week period, you must apply to the lender for forgiveness of your loan. You will have to supply supporting documentation to them to prove that the loan was spent on eligible cost and that you have maintained your full-time employee count. So to be sure to keep adequate records of all payroll costs and all other eligible expense payments, as you will need those records to support your request. The form for application for loan forgiveness is not available at this time, but you do have to file a loan application and you will have to make certain certifications. Current economic uncertainty makes the loan necessary to support your ongoing operations. You'll have to answer, are the funds were used to retain workers and maintain payroll, or to pay mortgage, lease, rent, and utility payments. You can have to certify that you have only gotten one payroll protection program loan. You are only allowed to have one. You will have to provide the lender the necessary documentation to verify the number of full-time equivalent employees. To be eligible for the full-time forgiveness of the loan, you have to spend 75% of your loan proceeds towards your payroll cost and maintain staff, and no more than 25% of the forgiven amount may be going towards the non-payroll costs such as mortgage interest, rent, and utilities. You have to provide this information with the loan application, and then you have to answer the certifications that are on the form and that all the information you have provided is accurate and will match the tax documents that you have filed. You have to acknowledge the lender will calculate the eligible loan amount using the tax documents that you've previously provided, and they will also then compare those to the information you provide on actual expenses to help determine if you are eligible for the forgiveness of the loan. If you do the payroll protection program, you're not eligible to claim an employee retention credit under the CARES Act. The retention credit is for businesses for operations that are fully or partially suspended and have experienced a greater than 50% reduction in quarterly gross receipts when you compare them to the same quarter in the prior year. The 50% retention credit is equal to 50% of qualified wages up to $10,000 in wages annually per employee, and it's for wages after March 12 to December 31 of 2020. The credit is used against your 6.2% Social Security employer's portion of your federal tax deposit. For the businesses that the retention credit applies, you should look at both the credit and the PPP loan to determine what is to your best advantage. There is also another SBA loan available. It's called the Economic Injury Disaster Loan, or the EIDL Loan. This program is available. However, to get this loan, you cannot double dip, and you cannot use the same payroll for the 8-week period that the Paycheck Protection Program covers as use of your EIDL loan proceeds. So there's no double dipping on the payroll. You can use your EIDL loan for the payroll period that is not covered on the Paycheck Protection Program. The EIDL loan also, if you've gotten one before the Payroll Protection Program loan, you can ask for a refinance so that some of your EIDL loan is considered for the PPP loan and also for the forgiveness of debt provision. The EIDL loan is going to be more complicated to get. Those of us who went through the flood know how those SBA loan applications are. You will have to prove creditworthiness. You will have to prove that you have the ability to repay the loans. They will require credit checks. They will require a lot more documentation with the loans, financial statements, tax returns, personal financial statements. You will have to give collateral. If you do not have enough collateral for the business to secure the loan, they will also ask for collateral personally, such as your home. You will have to give a personal guarantee. So the application process will take definitely a lot more longer than the PPP loans. But if you think that there's a chance you will need these loans and you're willing to do the collateral required and the personal guarantees, then we encourage you to start the loan process now. You can do the loans, be approved, and hold drawing on the funds until you see if you truly will have a need for them. So they're kind of like in a backup loan in case you need them. But just know that these loans will be a lot more paperwork intensive. For more information, go to the SBA.gov website. There's a Paycheck Protection Program information sheet for borrowers, and there's a Small Business Owner's Guide to the CARES Act. Again, this is Julie Garriggs with Burgess & Company, and on behalf of Franklin Southampton Economic Development and Burgess & Company, we thank you for listening, and we hope you find this information to be useful to you and your business. Stay safe, and wishing all the best to you and your family, your business, and your employees, and to our entire community. Thank you.